Hello there. Welcome. My name is Shavana Tierra. I am the founder of Entre Goals. We created this summit to help entrepreneurs like me, like you, like us, to have access to some of the smartest service providers, entrepreneurs, doers, and all around great folks who are people you want on your team that actually help you grow and sustain your business. And for this summit, the Doing Business in Nevada Summit, they're all amazing folks who are from and based in Nevada. So without further ado, I want to introduce you to our first guests. They are going to tell you all about building a bridge between tax and law. I have first Gina Bongiovi. Hey, Gina.
Hi.
Gina is a Nevada native like myself. She is a graduate of UNLV and a phenomenal business attorney. She helps and specializes in formations and contracts, and she's done a thing that attorneys hadn't done until around the time she started, which was go ahead and start doing flat fee services so you actually know what you're investing in and get back exactly the return that you need in your attorney, and also gives overall great advice, and a phenomenal community member and upcoming president of the UNLV Alumni Association, right?
That's right.
Awesome. So with her, we also have an amazing person who came and built her business in Nevada. We have Miss Rebecca Warnick. How are you?
Hello, I'm well. Hi, everyone.
All right. Rebecca, she is a CPA. She started her own firm, the Warnick Group. She specializes as well in small businesses and making sure that I saw this on your website. This was great, which was you focus on using 21st century tools to your advantage and actually helping people with their taxes and filing and all that. So welcome.
Absolutely. Thank you.
Awesome. So without further ado, I'm going to pass it on over to you guys. Thank you so much for being here. And we look forward to everything that you have to teach us and show us.
All right. Thank you, Shavana. Let me see if I can do this without incident. Very good. All right. Very good. So a little bit about Rebecca and myself. We work quite frequently with small business owners, and we collaborate a lot because having an attorney and a CPA who are willing to communicate with each other is a really great tool to help you grow your business. So I'm going to start a little bit on the legal side, and then I'm going to hand it over to Rebecca to talk about the tax implications. So when we talk about whether you want to incorporate or not incorporate. And by incorporate, I don't mean necessarily forming a corporation. I mean forming some sort of entity that you do business through that's not a sole proprietorship. So if you were to go out and print business cards and start attending networking events, you're operating as a sole proprietor. And there's some risk involved with that I'll go over in a little bit. So basically, when we're talking about whether or not you should incorporate, there's sort of two sides to that conversation. One side, as you see in my phenomenal stock photography, is liability protection. And so avoidance or protection from lawsuits. And the other side is a tax side. And often those conversations are not had in parallel, and it would really benefit business owners if they were. So if you're operating as a sole proprietorship, you'll see on the left, basically you want to think of it as a bucket. So operating as a sole proprietorship, your personal assets and your business assets are in the same bucket. The reason you form an entity is to separate your personal assets from your business assets into two different buckets. And then what that creates is something called a corporate veil that protects. So if you have any liability coming into your business, then the corporate veil protects your personal assets from being compromised in that lawsuit. Now that's of course provided that you are properly maintaining the separation between the two, that you are running the entity properly. So the entity being primarily an LLC or a corporation will be the two that we talk about most today. So in Nevada, we have right from the Nevada Revised Statutes, Chapter 78, which governs corporations, and 86, which governs LLCs, which says that neither the officers of a corporation or members or managers of an LLC are personally liable for the debts or obligations of the business. Now, of course, there are exceptions to that, personal guarantees and things like that, and managing the entity properly, but that's sort of the baseline. So if you're looking, if you are suffering from insomnia and you are interested in reading the actual chapter on in the statute, this is NRS 86.371. And then for corporations, we have a much more involved one. And so when we're meeting with people, it's often a question of, okay, now I don't want to operate as a sole proprietor anymore because of either because of the liability exposure that I have, or because it's more advantageous from a tax perspective to form an entity. So the conversation that we typically have is, do you want to form an LLC or do you want to form a corporation? And here's how I sort of approach that. So they really both offer the same liability protection. There's a little bit of a misnomer that an LLC has less liability protection, but if you go back and read the statute, you'll see that they have the same. But the choice depends on a number of things, a number of answers to questions that you might not have at the outset. So basically, obviously what type of business you have, how you're going to fund it, whether it's through your own savings, through traditional lending, trying to bring in investors, how you're going to grow it, how you're going to manage it, and how you're going to get out, which is one of the most important questions that Rebecca and I will ask a new business owner, but it's a little counterintuitive, especially if they're just getting started. They're like, how am I supposed to know how I get out? And so I really like the LLC for a number of reasons that we'll go over in a minute. So I sort of default to the LLC unless a couple of things are true. So if you're a high growth company, sometimes a corporation is a better option because you can do more sophisticated things with funding. If you're dealing with international investors, corporations are often a better choice just because international investors are more familiar with the corporation as an entity type, because an LLC has only been around for it's between 40 and 50 years in the US. Or you want to offer different classes of stock, which you can't do in an LLC, meaning preferred and common. And so this is just a little matrix to kind of do a side-by-side comparison in Nevada of the LLC and the corporation. So they both have the same liability protection. We're going to talk in a minute about the tax treatment, and then different classes of stock. You know, you can't have it in an LLC. It is more expensive in Nevada to operate a corporation just because of business license. The state business license fee that every entity must have in order to transact business is $300 a year more. All right, so I'm going to turn it over. Well, before I turn it over to Rebecca, the way I like to conceptualize this is if you have an entity like an LLC or corporation, pretend it lives in sort of two different worlds. One is your legal world and one is your tax world. So on the left side of the chart, you'll see all the different types of legal, not all the different types of legal entities, but the most common types of legal entities. And on the right, you'll see how those entities can be taxed.
Perfect. Thanks, Gina. So we've got a bunch of different options here, and it's great because one size does not fit all for each entity. So as Gina mentioned, there's the sole proprietorship, which is really looked at as a disregarded entity. The partnership kind of goes, tends to go that partnership route. Corporation, we've got a couple options there with the S corporation and the C corporation. And then with the LLC, the cool thing about the LLC is it can go to all four of those different types of tax treatment. So let's kind of break down each one and look at what that tax treatment really looks like on an entity by entity basis. So if you want to go to the next slide, Gina. Perfect. Okay, so let's start with the sole proprietorships. So this is not great for legal reasons, but it can be great for tax reasons and just for ease of use, right? So with a sole proprietorship, you don't have to go out and do any filings. As Gina mentioned, you can just kind of start doing it. So if you've got just a tiny little side hustle that you're doing on the side. Maybe you're selling some, I don't know, vitamins or makeup or oils or something like that. The sole proprietorship might be the right fit for you just because it's really easy to start, and it's great for just kind of a really small little side hustle that you're working on. And so with that, as far as tax-wise, you're going to file on what's called a Schedule C on your personal tax return, the 1040 individual tax return. So another great thing about that is you don't have the added expense or filing obligation of another tax return. It's just going to be a form on your return. It's really quite easy to do. However, there are some downfalls from the sole proprietorship from a tax perspective. So the biggest one is going to be you're going to pay self-employment tax of 15% on whatever your net income is from the business. So that's after you've taken all of your expenses and all of your deductions. You're going to pay that 15% rate. And that's really how the IRS gets their payroll and Social Security taxes. So they want to make sure that they're getting those payroll taxes, and that's why that is assessed. The second tax on a sole proprietorship is going to be the income tax rate. So depending on how high your income is, it may be 10%, it may be 20%. So you're going to add those two together. So on the low end, you're probably talking about 25% on up from there. So you can get into really high tax rates with a sole proprietorship right out the gate. So we definitely don't recommend that. Depending, if you're going to be a larger business, we're going to go into more of the more complicated entity types from a tax perspective. So let's look at the next option that we have here. So it's going to be a partnership. Now, a partnership, again, from a tax perspective, is going to mean that you have two partners, right? So you can't be in a partnership by yourself because there's nobody else to be your partner with. So we've got to have two. And then this one is going to have a separate tax return. It's called a Form 1065. So you're definitely going to be filing two tax returns there. But with a partnership, it doesn't pay income tax at the partnership level. It's going to pass all that income through to the partner's individual tax returns. So it depends on what your rates are going to be, what that looks like. Then if you are operating the partnership and you are a general partner, or you have the ability to make decisions for the partnership, that is going to make you a non-limited partner, and you're going to have that self-employment tax at 15% again, just like we saw with the sole proprietorship. Then you're going to have your income tax rate as well. So really, when we have this type of entity, it's going to be a decision from with the attorney, what is the best fit, and is it appropriate to have a partnership. There's some more complicated aspects of like losses and things like that that's a little more than what we're going to go into today. Okay, so let's look at the next entity.
Rebecca, can I talk a little bit about the legal side of the general partnership?
Absolutely.
So general partnership, so like I said, if you were to just print business cards and go out and start networking as an individual person, then you're operating as a sole proprietor. Let's say you and your bestie from college decide to do it. Then you formed kind of inadvertently almost what's called a general partnership. Now, the legal liability risk with a general partnership is there's no limitation on your liability. So the LLC acronym stands for Limited Liability Company. And while there are limited partnerships and limited liability partnerships, even in those, there's one person who, if you'll see it down on this slide, is a general partner. And that general partner has unlimited liability, which means you're personally on the liable for everything that goes on in the business. That protection we looked at earlier in the definitions is not available to general partners, which means that either one of you, let's say there's two of you, there can be more, but either one of you can sign contracts, can bind the other person, and because there's no separation between those two buckets, it can be really problematic. And so the limited, not to get too in the weeds on this, but the partnership previously was a more favorable tax treatment than a corporation, which we'll get into, I think, the next slide. But it didn't have the limited liability. So we had, historically, you either had the choice between forming a corporation, which gave you that limited liability protection from your personal assets, but it results in double taxation, and they're kind of a high maintenance entity to deal with. So then people would use partnerships. So the LLC came about to kind of blend the tax flexibility of a partnership with the limited liability of a corporation. That's how the LLC came about. Little fun fact if you want to bore people at cocktail parties. So here's the next one.
Yeah, so we're going to save the LLC for last because that's one of our favorite entities to deal with. So let's skip forward to the corporation. Maybe you've got some investors or you're planning on getting out of this business more quickly. Maybe the corporation is the right fit for you. So this one is going to have a very different way that it operates from a tax perspective than any of the other entities. So this one as well has a separate tax return called a Form 1120. But the main difference is this entity pays tax at the entity level. So you file this Form 1120, you made $100,000 at the end of the year, you're going to pay a 21% flat tax rate on that entity. So it can be really high taxation as well, because then we add in the second layer, what we call double taxation, is any money that's taken out of the business is going to be deemed a dividend, and then the individual is going to pay tax on that. So the corporation had to pay tax on the money that it paid out in dividends, and so did the individual. So we've got two layers of tax for that. So from a tax perspective, again, it's going to be one of the higher tax entities, maybe not the preferred, but there's definitely a lot of reasons from the legal entity or your overall goal with where you want to take the entity, where this may be appropriate to pay the higher taxes. Gina, did you have any thoughts you wanted to share on that?
No, I think you covered it. It's definitely the corporation even from a legal maintenance perspective is a higher maintenance kind of entity as far as needing to notify shareholders of meetings and making sure that notice is in writing and having another layer of governing documents. It's definitely not my favorite type of entity.
Yeah, probably the most common reason we see this entity is going to be like foreign partners, foreign owners. Okay, perfect. So let's look at the next one. So we can have our C corporation and we can file a form with IRS that's called an S election. So you went to Gina and you formed your entity and you've got a certain type of entity. We can take and do an election to change the tax treatment of the entities. And so that's going to be an S election. And so what you're going to have with the S election is you're still going to have that separate tax return. This one's going to be called a Form 1120S. The great thing about this is then you're able to have that pass-through tax treatment. So we're not paying any tax at the entity level, but it's all being pushed down to the individuals. And here's kind of the benefit of having an entity that has an S election. We get a little bit more control over the payroll taxes that we're going to pay. So rather than having our entity have the bottom line net income and whatever that is, we're going to pay self-employment tax on that. We have a requirement to pay a payroll for this entity, and we get to choose what that payroll is going to be at. Now, there's a number of rules of what this reasonable compensation item is going to be, but we get to control that self-employment tax, and so we can really recognize some significant savings from a tax perspective if we're able to justify a lower payroll than what we would pay for a traditional entity of it being assessed on our bottom line. This one also is going to be taxed at your income tax rate. So that payroll and your bottom line net income is going to be subject to your income tax rate at all. So really the savings here revolves around that payroll component and managing those payroll taxes. Okay, perfect. So let's look at the LLC. We saved the best for last. This is one of Gina and I's favorite entities. I like to call the LLC a chameleon. So the cool thing about the LLC is it can file on all different types. So we can file on our 1040 as a disregarded entity, a Schedule C. That happens if there's only one member of the LLC, and we haven't elected any other tax treatments. If you've got two members of the entity and you want to be a partnership, you can file on Form 1065. You can file a form with the IRS to choose that. If you want to be taxed as a C corporation and have those benefits and implications, you can also file a form with the IRS to get that 1120 treatment. And then you can even file a form with the IRS to get the 1120S S corporation, S election type treatment, and kind of have a little control and benefits of that payroll. So from a tax perspective, I love the LLC because there's so many options available to us. And so we work with that frequently. And then the taxation of the LLC is going to be depending on what form you filed with the IRS and what election you've made, and it would be from one of those previous slides that we had looked at. So Gina, what did you want to share? Did you want to share anything about the LLC?
Well, I think one of the biggest questions that I guess, which is an answer that I can't give, it's your purview, is when does it make sense? So if you started an LLC, you've been operating as a sole or as a disregarded entity, you have not yet made any sort of election for different tax treatment. When does it make sense to make that election?
So we recommend starting to look at that when your net income is going to be over $40,000 for the year. So you've taken all of your deductions, you did your home office and your mileage and, all the expenses of your business, and you get to the bottom line, which we call net income, and it's over $40,000. That's when it starts to make sense. You've got extra costs that you're going to have, particularly if you've been operating as a sole proprietorship and you want to do that S election and really have that ultimate kind of control. So the extra fees that you're going to have is payroll. So you've got to run an actual payroll. It means you've got to file quarterly payroll taxes with the IRS, with the state. So that can be an extra burden on the entity and some extra fees and things that you're going to have to pay. The next thing is if you've only been filing as a Schedule C on your 1040, we're going to add an extra tax return to it. So there's a cost involved with that. And then the third is what we would work with Gina is you're going to register your entity and create an entity with the Secretary of State. So you've got those fees that she was outlining for us before that you may not have had previously when you were an S election or when you were a sole proprietorship.
Yeah, and that's one thing I'll make a recommendation is payroll is super complicated, and it seems like you have to do a filing like every 45 minutes. And so if you're looking to delegate something, to hire outside help for something like that, I think payroll is a really good thing to start with. So if you do decide, so I'm a single member LLC, taxed as a subchapter S corporation, and I don't handle my own payroll, it's super complicated, and if you screw it up, the penalties are pretty high. And I think, Rebecca, your office handles payrolls, right?
We do, yeah. And the misconception is, well, I only have one employee, so it's going to be easy. You have to file the same number of forms and tax returns whether you have one employee or 100. So that doesn't really make a difference. The other thing to keep in mind, too, is if you make a mistake, which often happens if you're trying to do payroll yourself, you're going to pay someone like myself and Gina, you're going to pay us more money to fix the mistakes than you would have if you just hired the payroll company up front. So yeah, we pretty much recommend that if you're going to do the S election, when we're factoring in the cost benefit analysis of if that makes sense, we definitely factor in hiring a payroll service. It's not something that people should be doing themselves.
And then another question I get pretty frequently is when should you or can you make that S election? Like, when is it effective? So I'll tell a little bit of it. So I always tell horror stories when I do presentations, and I myself was a horror. Said, well, you should have been an S Corp from the beginning. And we tried to make that filing retroactive to when I started, which was like a little more than a year prior. And the IRS was not allowing me. And I ended up having to pay the CPA like thousands of dollars to try to fight this. And so I know when we apply for the EIN number for companies, they say that to make that S selection within, I think it's 75 days of formation.
Right.
I'm under the impression, all the CPAs I've talked to, I don't know if I just got a bad CPA at the beginning. Everybody I've talked to said that you can make that filing with the first year's tax return. But Rebecca, if you could talk a little bit about timing, I think that'd be helpful.
Yeah, absolutely. So the IRS changed its position a few years ago, and thankfully we do have a lot more leeway. So let's say you started your entity more than 75 days ago and you didn't know about this S selection and you hadn't filed anything. Now they've got a new rule that you can file under that gives you a little bit longer time frame. You're definitely going to want to have to draft up a specialized letter and explain the circumstances of why it wasn't filed within the first 75 days of creating your entity, but that's definitely something that we can help you with. The other option is if you've had your entity for a while and you're ready to file it, it's due within 75 days of the beginning of the year. So if you want that S election for 2020, we've got that new year coming up, you would have to file by March 15th to get it retroactive as of 1/1/2020. So that's kind of the due date with that. So if we've got an entity that's been formed, and we like to look kind of far into the future to see when they're going to hit that $40,000 net income figure and when it's going to make sense to do that, so that we can kind of fall within those time frames. It is possible to get that late election, especially with a properly written letter, but it's a little bit easier just to do it within those time frames if you can.
All right, ready to go on?
So Gina, I have a question for you though.
All right.
Do you have any net income figures that it makes sense to file an entity from a legal perspective, or does that just have to do more with like assets that someone may have?
That's a good question. So I'll go through, for example, I talked with a woman who is a personal chef, and she catered, as you would imagine, with a personal chef to very high net worth individuals. She's in their homes, she's using their kitchen equipment, and it made me nervous from a liability perspective that, if you're coming in with like Kevin on The Office when he walks in with his big pot of chili and trips and falls and it falls everywhere, if you knock over like the prized Fabergé egg, you could be on the hook for that. And operating as a sole proprietor, it gives you no liability protection. So I had that whole conversation with her about how important it is to have that liability protection so that whatever she's earning and paying herself in her own personal piggy bank is protected if she were to screw up. Maybe somebody doesn't disclose an allergy. These lawyers are trained to look for like worst case scenario. So somebody's got a food allergy they haven't disclosed. Somebody, there's some issue where she breaks something in the house. Maybe I don't know. Somebody accuses her of improper behavior. I went down the rabbit hole of really bad outcomes. So we get through that whole thing, and I kind of had her convinced that she needed to form an LLC. And I said, well, about how much revenue do you generate every year as a personal chef? And she said $4,000. And I thought, it's not enough income to justify, so it's sort of like you said, a little bit of a cost benefit analysis, where if she was making $40,000 a year, it might be worth, because kind of the resources that she's making from the business justify the expenses. It's a little bit like making that S Corp election. So if you're do the tax savings outweigh the cost involved in hiring a payroll company and all of the, additional attention that's paid to an S corporation over an LLC, the tax as a disregarded entity. So like every lawyer says, it depends a little bit on that, but there's not really like a final tipping point. So kind of the conversation that I have, it depends a lot on the type of business. So you mentioned like a lot of the network marketing, like the essential oils and vitamins and things like that. Even if they are generating a lot of revenue, I'm not super worried about the liability side of it, because typically it's the company that's going to protect you. Hopefully, I haven't looked at any of those contracts, but the company would protect you if there's some sort of product liability claim. So the conversation with people in those types of businesses is really a tax question. And if you're talking about somebody who's operating like a consulting business out of their home, maybe, I might not be as worried about the liability as I would be if somebody's operating like a skydiving business. So it kind of depends on the type of business activities, the risk, and then the money you're generating, because it doesn't make sense to spend all your revenue on forming an entity and having to maintain that so that was a long answer that did not end up being an answer. So sorry, it all depends.
It does, and I think that's perfect to take us into our next slide, and then if we have time for some questions. So how do you decide what entity is right for you? You definitely need to meet with your attorney and CPA, and hopefully they can be like Gina and I, where they're on the same team and can have that conversation together with you. But we've got to look at a couple things. Who are the owners of the businesses? Is everybody foreign or domestic, or is an entity going to own this business? What are your goals for now and the future? Do you plan to operate the business for many, many years, or just a few years and kind of get out? How profitable is the business going to be now and in the future? As Gina just mentioned, if the business really isn't making any money, maybe you're going to want to go with the cheaper option and less formal. And then where do you want the business to go? That huge question that's hard when you've got a startup and a new entity, may be difficult to answer, but what is the long range end goal, and how can we make that happen for you with the right entity?
Yeah, I actually will say it's becoming more and more frequent. When I first started the practice, it was very difficult to find other advisors that were willing to collaborate. And what ended up happening is I would have a conversation with a client, and because their CPA wouldn't talk to me, I would have to say, these are the questions to ask your CPA. But putting the client in the position of having to run and be the messenger with language that the client's not necessarily familiar with. So the way, like, for example, Rebecca and I work is she'll have somebody that comes to her and she's like, here's our tax recommendations, but talk to Gina about the legal side, and vice versa. They come to us, here's what we would recommend from a legal entity perspective, but there's a tax question there. And, in great circumstances, when the client, schedule permits, is we can all get on a conference call and knock that out. And then the client comes away with a more holistic version of advice than if they were just sent, to each different advisor. And so I think advisors are becoming a little bit more willing to collaborate with other advisors. People are not as territorial these days, but it's important as a business owner, whether you're talking with Rebecca and me or not, to try to find advisors who are willing to work with your other advisors so that you end up with the best result.
Absolutely.
And then I think we'll take questions.
Awesome, ladies. That was so great. Some of the questions that just watching myself, and if you can end your share, Gina, we can get back to the view of all of us. I love the fact that you were talking about how to work with advisors. Now, you two are two business owners yourselves. Like, who is on your power team of advisors to help you guys in your businesses?
Rebecca is on my, yeah, it's finding. So, I mean, for myself, we've got a CPA, a banker that we can get on the phone, an insurance person, a financial advisor. Who am I missing? Can you think of anybody else?
Sometimes
like for
payroll,
the immediate
if your CPA doesn't do payroll.
Mm-hmm.
Definitely the insurance, but I think the attorney and the CPA are number one.
Mm-hmm. Yeah.
Awesome. Another question that I had for you guys was more around getting started with a business owner and a CPA. What does a person looking to kind of find their first advisor, like what should they bring to you? What should they prepare for in order to have like the best meeting with you guys?
I actually wrote a blog article on that, how to choose the right advisors.
Exactly.
From my perspective, like number one is making sure that they're willing to work with your team. I mean, it's sort of like and this is not a political statement, but the president generally of the United States has a cabinet, because the president of the United States is not an expert in defense, treasury, all these different things. So, you know, the leader of the free world surrounds himself or eventually herself with a team of experts in their particular field. And running a business is similar, where you are, you know, the whole E-Myth thing where you're the technician, you know how to run your business. But like, I just talked to a guy yesterday and he's like selling his chiropractic practice. He goes, I've never done this before. And I said, well, that's okay, because I've sold at least 3 chiropractic practices and 10 businesses this year. So I got you. And so it's important to try to surround yourself with the right team. And you really want people that you jive with. I mean, you never want to have to, you know, if you dread calling your CPA, pick a different CPA, because you want that relationship to be something that you enjoy because you are paying for it, and you're also benefiting, your business is benefiting from it. So you want to find people that you can kind of sync up with.
Awesome. All right, anything?
And then,
go ahead.
Yeah, so it's helpful if you have kind of some numbers for your business as well. You know, we mentioned that there's different tipping points and cost benefit and things for different types of entities. So if you have some ideas of what your net income is going to be or what it has been, that's going to, you know, help us determine what options are going to be best from you, and kind of do a little scenario and work through and troubleshoot to figure out what the right entity is.
Awesome. All right, so please share with everyone the best way to get in touch with you guys if they have more questions, if they want to work with you directly.
Well, I will, let me see if I can move. So here's Rebecca's information. And I don't know if Shavonna, this is going to be available afterwards, but the warnickgroup.com. And then I'm over here.
I'm putting together a resource page of all the speakers, and then a lot of the local organizations that are also here to help entrepreneurs here in the state of Nevada and then beyond. So
perfect. Oh, there. I could have done that whole time. Sorry.
All right. Well, thank you so much. It was such a pleasure having you guys, answering these questions
Thank
and kind
you.
of helping everyone just weed out all the big issues they have in their head and talk to and learn from some amazing advisors and experts in the space. Thank you guys so much.
Thanks, Shavonna. Great job putting it together.